Morning, guys. It's Monday, September 15th, 5:24 a.m. Central Time. Grain market's a little bit lower this morning. December corn futures down 4.25 at 425 3/4. November soybeans down 5 3/4 at 1040 1/2. December Chicago wheat down 2 1/4 at 521 1/4. December Kansas City wheat down 2 1/4 at 512 1/2. December spring wheat down 1 1/4 at 570 1/2. Whole bunch of surprises from USDA and also from the market on Friday. Why don't we start there?
So USDA raised its corn acreage estimate by 1.5% from last month to 98.7 million acres, the largest since 1936. Despite a lower average yield estimate of 186.7 bushels per acre, the larger planted area led the agency to project a record corn crop of 16.8 billion bushels. U.S. corn ending stocks were trimmed slightly to 2.1 billion bushels, though they are still the largest since the 18-19 season. For soybeans, USDA lowered its yield estimate marginally to 53.5 bushels per acre. However, acreage was revised up 0.3%, lifting production to 4.3 billion bushels. Soybean exports were reduced as a result of the ongoing trade war with China, leading to a rise in U.S. soybean ending stocks.
Okay, we've got a bunch of charts and graphics here. Let's start with corn and let's start with acreage, which was the big surprise. USDA added another 1.4 million to the U.S. planted corn acreage estimate. A total of 3.5 million planted acres have now been added to the balance sheet since the June planted acres report. That's a massive, massive upward shift with very little precedent. This new number here, 98.7 million planted, that number is reality. That number is derived from FSA data, farmer reported acreage numbers. What was incorrect in hindsight was the June acreage report. USDA was way off with the June acreage report, which is primarily survey based. The surveys were wrong. I don't know if the survey response rate was too low or if the surveys were simply inaccurate. USDA has undergone they have a lot of problems. They're understaffed. They've had massive budget cuts. And I think that it's being reflected in the data. And we've got another story later that kind of goes along and jives with that idea. But in any case, the acreage number is real, guys. It was the June acreage number that was not real. I threw this together. This goes back to the 60s, but harvested corn acreage, which is the number that you put in your balance sheet, is the highest since the 1930s. You can see the trend here. We kind of popped up to, what was it, 86 million. And that was like kind of the ethanol boom initially in 2006, 2007. And then we kind of stayed high, and this is the highest we've ever been. And it's not because prices were good. It's because soybean prices were very bad and corn was just a little bit better by comparison. The U.S. corn crop now estimated at 16.8 billion bushels. Not only is that a record, that's a record by a tremendously wide margin. The previous record was 2 years ago, 15.3 billion. So you're talking a crop, if USDA is correct, that's 10% larger than the previous record. Just absolutely monster corn crop. The yield did come down. 186.7 is USDA's new yield number. And I think personally, the trade is of the opinion that that number is coming down more and maybe substantially. Let's talk about the market and what actually happened. So USDA came out with its numbers Friday, and the market traded lower initially. And then we came back, and December corn futures closed 10 cents higher. Despite a really bearish looking report, in my view. This is the way that I kind of read this, and I can talk over the chart here. You look at a December corn chart, and we knew, dating back to late 2024. I mean, even before that, you always know that USDA is going to start with a trend yield, which in this year they used 181. So the trade was working with a 181, in January, Feb, March. And then you get into planting, and yeah, there were some problems, but it was generally pretty good. And the market starts to leak lower. And we really started to leak lower in June, and especially in July. We had excellent July rainfall, which is the biggest determiner of corn yield, of course. The market bottomed to the day on the day that USDA printed its 188.8 yield estimate on August, I believe it was the 12th. So what I'm telling you here is that the market is smart, and the market knows where USDA is going with this stuff in a lot of situations. And that's what happened. I mean, we did nothing but sell off until they printed the big yield number. So the market was clearly ahead of that. I think now we're on the flip side of that. I think the market knows that this yield number is getting smaller. I think they knew it was getting smaller going into this report, and I think they know perhaps that it's getting smaller moving forward. One of the telltale signs of this, and I'm no agronomist, but look at this chart. This is ears per acre, and yield for just a 10-state region. It's not national. But that red dot in the upper right-hand corner is kind of an outlier. That's a very high bushel per acre number, given the ears per acre, which is the blue bar. You can see we had something similar last year, and ultimately that fourth red dot over for 2024 came down. And I think you're going to see something similar for this year, if I had to guess. So with regard to the corn market, yeah, you got a really bearish report, but I think the market is looking past it and to other things. I think they're looking at a yield number that comes down and maybe comes down substantially. We know August was dry. We've got disease pressure. There's been some problems out there. Looking at soybeans, it only came down a tenth of a bushel with the yield, and I feel the same thing here. I feel like further downward revisions could be warranted. August was just so dry. I have trouble believing, just based on August weather, that this yield number is going to be as big as advertised. I don't do very strong opinions on yield. I'm just trying to tell you, I think, what the trade believes this will be. 4.3 billion bushel soybean crop is a big crop, but we've been there before. So, I mean, long story short, when it comes to report, the corn acreage number was the big surprise, but perhaps even more surprising is the way that the market acted following the report.
The funds increased their net short position in the corn market last week. For the week ending Tuesday, September 9th, large money managers were net sellers of 4,000 corn contracts. The funds were also net sellers of 25,000 soybean contracts and 10,000 SRW wheat contracts on the week.
Okay, so fund traders, large speculators, they have been in short covering mode as it relates to the corn market. They have covered shorts in 4 or 5 well, actually last week they were net sellers, but they've generally speaking been covering shorts, and they probably bought 15 to 20,000 contracts in net just on Friday alone. So the net short in the corn market that the funds are holding in real time might be 75 to 80,000 contracts, somewhere in that neighborhood. So I think that the fund trader is kind of going along with what I told you guys earlier. I think that they think, collectively, and of course everybody's thoughts are different, but the trade and the large money managers, I think they're looking at a corn crop that's getting smaller from here. I mean, that 16.8, nobody saw a print that big coming, but I think that yield number is going down. I think that's what they think.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
Report day is a good day to be a premium subscriber. I had our USDA snapshot video blasted out within, I think, 10 minutes of the report. USDA was actually on time with the report on Friday, which is amazing. It hasn't happened in a long time. In any case, this is like a quick 3-minute video that you can watch where I explain what happened and you can go about your day. These get a ton of views every single month. Paul Neiford did an ARC and PLC update on Thursday. Also talked about direct farm payments, stuff that's pending, stuff that's out there, the remaining 15% of ECAP, the supplemental disaster relief, all that stuff. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We just send out a ton of content to our premium subscribers every single business day, and that's what you pay for here. This morning's email includes a whole bunch of stuff that is not included here on the podcast. The most interesting and maybe important stuff are the ending stocks to use ratio charts. Premium subs, you guys have that in your email this morning. The fund tracker charts are included, and of course, every day these 6 most recent premium videos are included. Give that deal a shot this morning, guys.
U.S.-China trade talks are set to resume this week in Madrid. Treasury Secretary Scott Bessent will meet with the Chinese vice premier to discuss trade, economic, and national security issues. The talks aim to lay the groundwork for a potential deal under which China would commit to purchase agreements in exchange for reduced U.S. tariffs. The meeting comes as Washington and Beijing engage in discussions to facilitate a potential meeting between Xi Jinping and President Trump. It also coincides with the approaching expiration of the 90-day tariff truce in early November.
Despite everything I told you guys earlier about the positive action in the corn market, corn and soybean prices are still drastically below production cost. And the farm lobbies out there have been asking the Trump administration, begging the Trump administration for relief. Hey, we need China to come in and buy soybeans. And we do. We hope that Scott Bessent and Trump are hearing those calls, because without a Chinese purchase program, it's going to be tough. And admittedly, if you guys look at the stocks to use ratio charts this morning, I had some really good statistics in the soybean section. I can make an argument that soybeans are underpriced right now. I could, but it's a really bad vibe and bad sentiment when China's got 0 on the books.
Last week's reported soybean sale to China actually occurred back in January. In its weekly U.S. export sales report, USDA listed a roughly 2 million bushel sale of soybeans to China for the week ending September 4th. The sale, however, was reported late and was instead an export transaction that took place back in January. Due to the ongoing U.S.-China trade war, China has yet to purchase any new crop U.S. soybeans. Last season, China purchased a total of 26.8 million metric tons of U.S. beans valued at $12.6 billion.
We got a lot of weird stuff going on with USDA data. I mentioned the acreage numbers. This is along those same lines. There's a lot of things going on at USDA and NAS, and I think the World Board also. They've had budget cuts. They've had big employee relocations where they moved a bunch of offices like from DC to elsewhere. They're understaffed drastically from what I'm told. I was told that NAS is at like 60% of full staff. So it's I think that this is all showing up in the data, and I'm not making excuses for USDA, but I mean, if the people that put out the reports are really severely understaffed, it's going to show up in the data, and I think that's what you're seeing here, and that's my take. I know USDA's data, people have always argued with it. As long as I've been in this business, people have been arguing with USDA and bitching and moaning about everything that they say. But I think that this stuff, like that big miss on the acreage, this sort of stuff where the sales are reported late or incorrectly, it speaks to the staffing, to the underfunding, all of that.
USDA reported a flash sale of soybean oil on Friday. U.S. exporters sold 22,000 metric tons of soybean oil to South Korea for delivery during the 25-26 marketing year. This is the first flash sale of soybean oil for the new marketing year.
This is what should be a very, very rare flash sale of U.S. soybean oil because we are projected to use so much domestically for biofuel. We are going to be exporting very, very little. And this export sales of U.S. soybean oil will eventually be zero or near zero. I think we're headed in that direction. What did cattle do on Friday?
Cattle futures were lower on Friday. Live cattle were 202 to 267 lower. Feeders saw losses ranging from 482 down to 732. Fat cattle traded lower last week, down $3 to $4 at 238 to 240.
Outside markets this morning, Dow Jones is up 70 points, S&P's up 10, Treasuries are off a little bit, U.S. dollars close to flat. Crude oil is up 21 cents in the October WTI at 62.90. Have a great week, guys. We'll be back on Tuesday.